Hi, this is Todd with Integrity Investment Advisors. Several of our clients who live in the villages asked us to make this video. So if you live in the villages, this is how to pick a great advisor if you have $1 million to $10 million plus portfolio and you live in the villages. This video might save you thousands on fees between $6,000 and $20,000 plus a year. So enjoy the video. So here's the sad truth. Most financial advisors will end up doing more harm than good. The big firms and banks, they want you to believe it's just normal to pay 1% or 1% plus on your portfolio. We don't believe that at all. So if you have a portfolio that's $500K to $10 million plus, we believe you want a fee-only fiduciary for you 100% of the time, and advisor fees below 1%. Watch this full video. We think it's worth over $1,000 a minute, and we are really built for the millionaire next door. So here are 5 things we believe you want in an advisor. We believe you want fee only, not fee-based. Fee-based means they have fees and commissions. They're probably a broker. They might be trying to sell you some insurance products or annuities behind the scenes. So we believe you want fee only with no commissions. We believe, and this is super important, you want a fiduciary for you 100% of the time. If somebody says they just have your best interest at heart and they're not a fiduciary for you, just get in writing. This is your life savings. You deserve to have a fiduciary for you 100% of the time. So that means independent RIA. And you want advisor fees below 1%. Again, we are really built for the millionaire next door. So our fees are 0.6% on the first $1 million. And then our fees decline to 0.3% above $1 million. So we are super competitive for those accounts that are $1 million plus. So a $2 million blended portfolio is about 0.45% on the $2 million. $3 million is 0.4%, and it keeps declining from there. We believe you want a data-driven approach to investing, and you want great software at the firm level. And we believe you want holistic services. So portfolio management, financial planning, tax planning, Social Security planning, Roth conversion strategy. If you live in the villages and you don't have a Roth conversion strategy, you are really missing out. And then we also have access to no commission annuities and more. So people that really need an annuity for some reason, most people don't, but if you have one or you need one, we have access to no commission annuities. So if you work with a big bank or a national firm, where does your fee go? And this is a great chart. So a lot of your fee is going to office space, marketing, and profit margin. A lot of the big banks and certainly the national RIA firms have private equity investors. And this can be substantial as far as the profit margin in the firms. And then part of your fee goes to legal and compliance. Everybody has to do that, using great software, and then people and wages and benefits. So for a lot of, if you have like a $2 million portfolio, say your fee is $20,000 a year, half of your fee is going towards these items here at the top. So we help people keep their fees low by cutting these out. We don't have those, and we focus on the software and the people to cut out the middlemen and reduce your fees. So think about that when you're doing this analysis. So here's a great chart on industry averages. So these are the average firm here is this golden line here, and these are the fee schedules here. So for typically a lot of firms charge 1% on the first $1 million or a couple $1 million. You can see that right here. So about $10,000 for $1 million. Ours is much less than that. Ours is 0.6% on the first $1 million, so $6,000. And our fees are even much more competitive for the $2 to $10 million range of clients. So if you have a $2, $3, $5 million portfolio, we consider these are high profit clients in this range. If you're paying $20,000, $30,000 a year, a lot of times people don't even know what their total fees are. So we do this second opinion, which I'll show you later in the slide deck, where we'll actually show you your total fees for your expense ratios, the mutual funds, the ETFs, and the advisor fees. But these are high profit clients. And if you have over $2 million, we believe you're massively overpaying for your scope of services. And we are really built for the millionaire next door. So I believe we add massive value for people in this group. So you might want to consider making a change. So here's a great slide. You could pause any of these, but a lot of people are in this world, and a lot of people in the villages are broker dealers, sales reps, insurance reps. Maybe 80% of the people, they are fee-based, they have commissions, They're sales reps. They have high fees, maybe limited knowledge and not so great software. They use some proprietary funds, which we're not big fans of. We like Vanguard, dimensional funds, iShares, low-cost funds. They have lots of conflicts of interest. They maybe don't have a tax strategy or Roth conversion strategy, limited planning software. It's really a bad model, okay? If you have funds that are A, B, or C shares, those are very expensive, okay? And times have changed and you need to get out of these. So we believe you can do a lot better than this side here. We believe if you have $1 million plus, you want a top tier advisor, okay? So that's fee only, fiduciary, and low cost. Advisor fees below 1%, data-driven, best-in-class assets, okay? Not just one family, okay? So you don't want Wells Fargo funds or just Schwab or Fidelity funds. You want a mix of the best funds. We believe you should want access to dimensional funds, Avantis, AQR, iShares, Vanguard. We're big fans of Vanguard and many others. Again, great software. If you live in the villages, I would tell you, we have a whole separate video on this, on Roth conversion strategies. You really want one, you need one. It'll save you money on taxes. It'll save your kids, anybody who inherits your wealth, money on taxes. And you want somebody who's going to help you live your best life possible. Again, no commission. So this is what you want. We'll show you some more here. Not all advisors are the same. You really want a software with a great advisor with great software and great people. Okay. I've said this several times. We're really built for the millionaire next door. What this means is somebody who has, a portfolio of $1 million to $10 million. They've made a lot of money through their lifetime, maybe own their businesses, were high paid employees, really good savers. There's a lot of people in the villages who want to retire fully in the next 10 years if you're not already retired. I know people are moving down there earlier and earlier, which is great. But there's a lot of planning that can happen in this phase if you're 5 or so years away from actual retirement. And people who want to partner with a fee-only advisor. So again, I believe people in the $1 to $10 million are really massively overpaying for the scope of services. We're going to show that for you and what that means. So most clients really want 3 things. You want investment management on this side. So this is the portfolio. This is looking at your 401ks. Using low-cost funds, using factor funds from dimensional funds, Avantis, AQR, and others. Fee-only fiduciary. So this is a big part of what people do for the fees. But you want the other lanes also, so you want somebody who's going to take a look at your retirement plan. Will you run out of money? What are the chances? How are you planning for long-term care? When should you be taking IRA distributions, Social Security? When do you do all those types of things? And again, this is great software that makes this happen. And then the other area is tax planning. So Roth conversions is a really hot topic right now. I think more and more people need to be doing them, and you really want to lower your lifetime tax bill. So we use great partners, again, like Vanguard, Dimensional, iShares. Our planning software is Right Capital. And then we have Holistic Plan for tax analysis and so forth. So a great end-to-end solution. You don't have to pay 1% for an advisor. You can do much better. And that's sort of what our model is. Okay, so how to pick a great advisor. So a lot of times, and I see this down in the villages, there's a lot of firms like Edward Jones, LPL, Northwest Mutual, insurance reps and sales reps and brokers, Wells Fargo, Merrill Lynch, and so forth. Mostly they are not fiduciaries, or they're very limited with their fiduciary status. They sometimes have commissions and they can be expensive. So we're not a big fan of this bucket. We think you can do better. So there's some independent RIAs. That's what we are. There's some large national ones like Edelman Financial or Fisher Investments. We're not a fan of those two. We think it's pretty high fees for what they do. But there's some good ones like Buckingham, Carson Wealth, Creative Planning, Mercer are pretty good. They are fiduciaries for you. And most of them do planning and tax management, but they can be expensive. So $1 million is normally $10,000 plus, 2 million is over 20, and so forth. So we think we can do better with our model. We are independent RIA. We're a fiduciary for you. We do portfolio management, financial planning, tax optimization. We help you cut out the middlemen, and our fees are great, I think, for a multi-million-dollar portfolio. So $1 million is $6,000 a year, 2 million is 9, 3 million is $12,000 a year. So, so that's what we do. And we think we help you cut out the middleman and really keep more of your money. So here's some fee schedules for people in the villages. We just took these from their ADVs. their disclosure statements. Ours for $1 million portfolio is $6,000 a year. For $3 million is $12,000. We have a tiered schedule, but there's some other ones in here. You know, Edward Jones, Fisher Investments, Citizens First Bank and Trust, Fross Fross, Parady, and some other people that do work in the villages. That, you know, for $1 million portfolio, it's maybe 10 or 12 plus $1,000 a year. And for a $3 million portfolio, it can be quite a bit more. A lot of these are in the $30,000 a year type of program. We think that is way too much. We think you can do better with our type of model and provide end-to-end solution and massive value for our clients. So we tell people, think if you had to cut a check annually to your advisor, what would that check be for, and how would that rank in your yearly budget? And for most people, it would be pretty high. You know, you maybe have housing, or maybe your house is paid off, but you might be spending more in your advisor fees than you do on vacations, or more than you do in healthcare. So we just think that's too much, and you need to take a look at it for your scope of services and see if it's the right amount. All right, so we tell people we want to see what do you want to own and why. And for a lot of people, we want some liability matching in this part of the portfolio and short-term, high-quality bonds and spending. And then if you're retired, you still need a good bucket that is 7+ years down the road, compounding in equities, real estate, private equity, those types of long-term investments, so that your portfolio can grow into your 70s, 80s, 90s, and beyond. And then we also have a middle part of the bucket that has more of hedging and some alternatives and some risk mitigation strategies for volatile markets. So you want to be careful on what you own, and we can help you look at your current portfolio today and see where you can improve that. Here's some great data. This is from the SPIVA scorecard. A lot of portfolios I look at from the villages, they have a lot of active management and proprietary funds. And those people are not even keeping up with the benchmarks. So many funds do not keep up with the benchmarks over a 10 or 15-year period. And you can do much better by just using standard benchmarks, say Vanguard indexes. We think you can do better with factor investing, slightly better, and we'll show you that data also. But many people, the portfolios I see in the villages are not even keeping up with benchmarks. If for some reason you have annuities today, you can maybe do better on these. We have a relationship with DPL. Conventional annuities are not very good. They have sales commissions. You really need to be watching out for this in the villages. A lot of people sell these, and they're very high commissions that reduce your benefits. The more modern annuities are commission-free. So if you have those, or we can convert you to those have a lot lower fees, and that allows you to really keep more of your money from an annuity standpoint. Most people don't need new annuities. You know, Social Security is your first best annuity. And then if you have a pension, that's additive to that. And a lot of people don't even need an annuity to begin with. But we have access to commission-free annuities that offer fixed income if you need that, downside protection, and they help to mitigate risk if that's how you're wired. So in summary, what we help people do is sort of get from where you are today to where you want to be with all the volatility. We do end-to-end asset management, financial planning, Roth conversions, Social Security analysis, tax optimization. And we really tell people we help you to have more confidence about where you're at in the path you're on, that you're not going to run out of money. And we help you to live your best life possible. So if you click below on this page, you can get a free second opinion. That includes a discovery meeting. A lot of people say they wish they had known this data 10+ years ago. So it's a great way to find out what's going on with your portfolio, your total fees, end to end, how much you're paying, and red flags. It's 100% free. So we do a discovery meeting via phone call or Zoom. We gather your data and we analyze it. Then we book another meeting with you to show you the actual report and the data and the red flags potentially in that process. And then you can decide if you want to move forward. It's great if you do. If it's not a fit, it's no big deal. At least you know this information and you'll know the red flags. And then if you want to get started, you can work with us. And typically people are saving quite a bit of money to do that. So I encourage you to book a second opinion below. We are really built for the millionaire next door and look forward to hearing from you. Thank you so much.